All right, guys. Good morning. Good morning. It is 9 a.m. Eastern Standard Time. My name is Carlos Garcia, founder and CEO of GAR Capital. Thank you so much for taking the time out of your day to join me this morning and every morning, 9 a.m. Eastern Standard Time here on the YouTube channel. Bottom right-hand corner of your screen, there's a black logo. Click on that, turn on notifications, subscribe to our channel. Make sure to hit the like button if you like these videos. Really helps out the algorithms with YouTube, so you don't miss any videos. Notifications button needs to be pressed, and make sure to subscribe. Let's go ahead and get to it. OPEX day. I did post a chart regarding what is expiring in terms of stock options, futures, and all that stuff. That was on Instagram yesterday. We have right around $2.1 trillion in notional expiries. Now, again, when it comes to OPEX, it doesn't mean higher or lower by any stretch. It just means higher than usual volume, since you either have to roll over these contracts or you have to exercise them, since we are an expiry. So if you're a futures trader, you're now looking into the December expiry. Moving forward, again, if you're looking at quarterlies, if you're looking at monthlies, like gasoline futures, oil futures, and gold futures, then oil futures and gasoline futures. I think gold is monthly as well. Keep that in mind. I haven't traded gold in a while. Let me make sure I have that and see if I get that correct. Let's see. Let's go to GC. Exactly. Yeah, that's monthly. I knew it. Yeah, it's a monthly contract for gold as well. So think of its commodity futures are monthly, 30 days expiry, and the index futures are every quarter. All right, let's go ahead and get started and talk about futures this morning. S&P Dow futures are down 202 points, Nasdaq down 134, S&P down 34 points off its lows, and Russell's down about 1% this morning. We did catch IWM yesterday. Good exit to get out at 30. I think we got, what did we get exactly yesterday? I think it was around 35. We got to 40. I took it at 35. So well done, team, to get out of that. It was for next week expiry anyways, but good to take some profits off the table. Kind of a choppy week, as we know. Not a lot of volume across the board, but a pretty decent week. Again, just trying to keep the risk low, not to get into too many things, especially as we're in the dog days of summer. As again, like I said, volumes are low really until Labor Days, when everything starts kicking up into a little more overdrive. Next week, we talked about the Jackson Hole Symposium. Fed Chair Powell will be speaking over there, and we also have core PCE on Friday and some GDP numbers on Wednesday. I'll go ahead and post that up on Instagram. Same thing with earnings, like we do every weekend. Over the weekend, give you an update on crypto, because weekends are still up for crypto, or still for crypto. Excuse me. Speaking of crypto, Bitcoin taking a hit today, 21,425, down about 8%. 9% down for Ethereum, 1696. If you remember, just this weekend we hit 2,000. So we'll call it $300 off the top is where we are in Ethereum. Bitcoin, I think we tapped about 24 or so. We're at 21,430, so around nearly $3,000 off the top over the weekend. So again, and the reason that is with Bitcoin, really right now, it is really what I've been reading is Bed Bath and Beyond. Bed Bath and Beyond, Ryan Cohen, I think he was the head of Chewy, became the head of GME, which is GameStop. He bought a stake in Bed Bath. It pumped, he dumped. Basic. It is down this morning. Let's go ahead and get you the exact number. The stock is down 34.45% pre-market. It was down as much as 42. According to Bloomberg, that's why we're getting a lot of sell orders in crypto, I guess, to prop up that loss. Whoever was holding Bed Bath and Beyond or sold it and needs some raise some cash. That's what it seems to be. So I expect weakness across I guess the meme stocks, if you want to call it. Look at GME this morning is down. AMC is down this morning. What is another good meme stock? I think is BlackBerry. I think they're down about 10 cents. So a lot of the high betas are more than likely going to take a hit today. Palantir's down today. We could do Upstart. So again, looking at these names, look at Coinbase down as well, obviously with crypto. Mara, again, got a couple of gaps to fill. But for the most part, expect those high betas to hurt the market, or at least in the Russell, because GME is a big part of the Russell, AMC too, but NASDAQ as well. Those NASDAQ names, those momentum slash high betas are part of the Nasdaq exchange. They're not necessarily part of the QQQ. I think a lot of people get that confused. QQQ is the Nasdaq 100. The Nasdaq ETF or futures is Nasdaq. So again, composite. Again, that's the whole Nasdaq. Nasdaq futures is the Nasdaq 100 futures. So right now we're down about 1.0% on Nasdaq. On Qs, you could see we're down about $4 this morning. Obviously, with everything going down with OPEX. Let's go ahead and get to S&P futures. Looking at this chart on the 1 hour, we really haven't broken anything meaningful, even with this move. 42.39 is your 200-day moving average. Again, if we start breaking that, again, 42.23 would be key support. If we start breaking that, then we have a lot of room to go down, 41.25 to 4100. So again, if we're seeing a drop, we're gonna play it. We're gonna see if we get that move. And again, overbought conditions. We talked about that. We're not at overbought anymore, not that extreme. But the problem is just low volume chop. So I wouldn't I wouldn't want to be just jumping into the market today just to look to something to buy just because it's just not a lot of volume. Spreads are going to be a little wider in terms of your options. Today's expiry may get a little exciting, maybe, but again, you're looking for next week expiries anyways. Let's go ahead up NQ Nasdaq futures broke the 200-day. We do have support right around 12,235, so we're going to keep an eye on that. Let's keep an eye on crude oil this morning. Crude oil is bouncing slightly. Again, we got above or tapped 91, came back down. Still a downward trend. Still looking to see if maybe we get a shot at possibly riding some momentum higher on crude oil. But again, we need to start breaking the 200-day on the daily, 94.97, and we're just not there yet. 10-year yields did pop this morning. Again, with the dollar, right now we're at the 50-day moving average on 10-year TNX yields. We do have a gap to fill down to around 28.88. I expect that to fill, and then we'll see where we go from there. But needs to hold resistance right around 30, which is around 3% 10-year. You can see we'll get us right in the midpoint of that head and shoulders that we had, where we had that drop and then nice bounce. Excuse me. Really, the tell of the tape is really the dollar, and we've talked about the dollar many times. Let's go ahead and take a look at a weekly chart, and you could see this nice trend line. It looks like we may be retesting to around 109.25. If the dollar goes higher, expect stocks to get weaker. So again, take a look at the daily. If we start breaking below 106.31, which is your 20-day moving average on the daily chart, then we'll probably expect a little more weakness. But until then, looks like around 109.30 is our resistance. So again, if the dollar continues to rise, expect weakness in commodities and equities as well. May give us a nice little backdrop to start shorting, but we need to see some support breaking. Let's take a look at the volatility index. Again, still hovering around that 20 level, below that trend line here at 2142, just like we talked about the 20. So we have the dollar above it, but we have the VIX below it. So again, let's see if we can hold below. If the VIX starts breaking around 2142, the dollar more than likely is above that, stays above that 20, maybe testing those highs. And then we'll probably get to around 22, 24 or so, and really start getting a little bit of sell orders come in, as the last 4 or 5 weeks have been just the bulls running the show. Let's go ahead and get to one more piece here. I think I had gold is pretty much flat, 1770, and silver down 1.5%. So even with the dollar being up, gold is not really moving. Euro dollar right near parity again. So again, it never hit my alert to want to go long. If we start breaking below parity, we can start taking a look at the euro dollar for a short, but not much opportunity there. Dollar yen. If we start getting above this level here, which is around 139, let's call it 139. We can start taking a look at going long again on dollar yen. We played short before, and I think we played long. So keep an eye on the dollar yen. Other than the OPEX day today, guys, really not much to be expected. Again, expect elevated volumes, but volumes have been relatively low anyways. So I wouldn't want to rush to do much today anyways. So just keep that in the back of your head. Let's answer some questions. Wolf is asking, good morning. Any news on why futures are down, or just Friday's sell-off when you were playing some Apple puts for next week expiry? You're going to see Apple hit all-time highs. So really the big reason why stocks are down was really a horrible, horrible German PPI number that we had. So again, Europe kind of giving us a little bit of a hit. Germany PPI was up 5.3% month over month. The expectation was 0.6%. So extreme high inflation in Germany, obviously energy crisis with Russia. I mean, if you're a student of history, Germany and Russia have been at odds for generations, just been that way. But again, at the end of the day, that is hurting European market. I've said this before: the United States economy is strong, but again, we are the best house in a bad neighborhood. Europe is weak. We know that Asia is weak as well. So there is obviously a global slowdown. I think we can all agree, if not a global recession with this energy crisis. But the United States is faring better. Hence why our equity markets are performing a lot better than the German DAX or the British FTSE or any other European stock market. In terms of Apple, really that's where you're getting the risk off there. But in terms of Apple, I mean, you're just hugging the 172 level here, which is your 100-day moving average. So nothing here tells me that you need to short. Nothing here tells me we need to go long. You do have a gap to fill right around 173.92. You can expect that to fill relatively soon. So if that does happen, then we do have more upside on Apple. Really, my resistance on Apple is we're still hugging this trend line here, but again, we may break below a little bit, maybe test 171, but I really do expect Apple to get to around 179, maybe by the end of the month. Morning, Carlos. No question. Just want to say thanks for the videos as always. Thank you, William. Appreciate it. Ian is saying expected cover calls today, but DXY elevated. Sounds like a day to sit on your hands. Have a good weekend, Carlos. Thank you. Yeah, Ian, I think Ian has the right idea. Again, if we see some opportunities, guys, as a trader, it's really like waiting for a bus. You're going to get one every 15 minutes or 20 minutes. You're always going to see something nice. So I don't want anyone to kind of get this FOMO. I think a lot of Bed Bath and Beyond traders had that FOMO as well. Just be careful. Again, there's no need to give away anything to the market. They'll take your money if you mess up. So again, just wait it out. Wait and see the approach. Again, it's Friday. We know how Friday goes. If we get some volume to the downside, of course we'll take advantage. If we get some buy the dips, we'll see if we take some advantage. But I am leaning to definitely the short side if we get some real rock and movement. But again, we're off the lows anyways. We really didn't break anything meaningful. Again, I said this to the blog. If this is the best that the Bears have, I'm not impressed because we should be going lower if that's the case. And I appreciate the feedback as well. Hi, Carlos. Any recommendation on the best source to capture unusual options activity? Thanks. Well, there's a couple of them out there. There's a lot of like flow algos that you can use. We have with our Discord, we have something called Tradelytics. That it's a bot, so they give us like breakout activity here. They license it out to the other Discords. We pay for it. It's part of the service. So again, for premium and masterclass. So we get like breakouts here. But in terms of unusual options activity, you have different ones. There's ones called unusual whales. There's some that are flow algo. There's cheddar flow, I believe. So there's a ton of them out there. But again, unusual option activity, you could do this at home pretty easily. You just go to trade. You're going to go, excuse me, you go to scan, you go to options hacker on Thinkorswim, volume 10,000 minimum. 10,000 seems to be a good level for unusual options activity. And keep in mind, even if it's over 10,000, it doesn't work sometimes. And the perfect example is Walmart. Walmart, we had a really good, we had like about 10,000 in vol on Walmart or so, and that thing flipped down. So I would be careful on it. I don't trade unusual options heavily, let's just say, or as many times as people think. Sometimes you'll get some great trades, like Disney had earnings. We had an unusual options activity. I sent it out to the team, and I did catch it for a nice gain. But it is really hit or miss. It is taking a look at the unusual options activity and taking a look at the chart together, kind of looking at it as a way to kind of guide you towards a possible setup, not as a guaranteed one. But in terms of unusual options activity as well, you can always go to bar chart and they have it for free. So I think they have a paid service. You go to bar chart and you go to options here. This is obviously delayed about 15 minutes. So again, you could see here you get some unusual options activity, some other things to research as well. So there is some free services out there. There's also some paid services that you can use. Again, whatever service that you use, whatever tools you use, if it works for your system, I say go for it. If it doesn't, and you're just trying to see what works for you, I would definitely at least try the bar chart or at least the scan TOS tab I use, and that could probably get you in the right direction. And thank you very much, Wolf and Omar. Great question. So again, I think Ian has the kind of hit the nail on the head. We could be getting a buy the dip here. Not much to go by. Uh, I just don't see much here in terms of volume to want to do anything at this very juncture. It's been a pretty quiet week for the most part. We're just kind of seeing what happens next week, kind of preparing ourselves. The Fed has already done a lot of chatter about, increasing rates. So a Fed pivot, not a Fed pivot, kind of tough to go by. We've had a hell of a rise. So it obviously makes sense that we give some back, but this market has not done that. A lot of people are waiting for that next shoe to drop, or the 2008 analogy where we get that bounce and then we fell. If you guys want to see that, take a look here. Here is 2008, where we had a nice pop, again, the nice little bear market rally, and then we fell again. So again, a lot of people are using that analogy. I don't agree with it, just for the simple fact that we don't have systemic risk the way we had it, like the way we did in 2008. 2008, you had Lehman Brothers crash, okay, in October. Unless we think Bank of America is going to crash, it's not. Banks are very well capitalized. The only thing I did read on Bloomberg today is a lot of mortgage lenders may be having at least some cash flow issues. Obviously, in kind of the same deal. You have you write these loans, you're trying to sell them, and if you don't sell them or you don't get a lot of applicants, you're going to have a cash flow issue with your company. But again, that's a small sample size that I read on Bloomberg. That is not indicative of the whole market either. Is it something to look for? Yeah, I always say take a look at the 10-year yield. That's going to give us the clue to where mortgages are going to go, since they're based on the 10-year. So again, if you're someone that's just not equity trading, you want to see kind of how macro works on, or what else is important in terms of the macro environment. Yields, you're looking at commodities like crude, you're looking at the dollar, obviously, super important. And of course, you're looking at the VIX if you're a trader. So little things that you're watching for every day. Just because nothing's happening in the equity market doesn't mean nothing's happening in the world's market. And again, that prepares you for the rest of your day or the rest of your trading month, let's just say. The 5 things you need to know about is daily every morning on Instagram. I hope you guys enjoy it. That's direct from Bloomberg. And of course, the market recap right when the bells closed and I get the information, I post it to you guys. So I really do appreciate it, as always. If you like GAR Capital's Instagram for all the news, share with friends if you do enjoy it. We love to help you guys out, as always. I'll probably do a Q&A this weekend. I do them during the times where I get a couple of minutes or a couple of hours to just relax. I get like a ginger ale and I just kind of hang back and watch some YouTube or something like that, some documentaries. I'll throw on some Q&As. So be on the lookout for that. I'll let you guys know. Have a great rest of your weekend. No aftermarket recaps today. And have a good one, guys. Let's make it a great trading day. I'll see you guys on the blog this morning on Discord. See you guys later.